Hey, what's up, you black-eyed nihilist, you dirty pigs sitting on Rollbit playing roller coaster from morning till night, 18 hours a day, while your keyboard collects Cheeto dust, sitting there in the same goddamn wife beater that you've stained with mustard for the last week. Dude, clean your room and get to charting. So while you're doing that, ruining your lives, I'm going to do a little actual charting here. Hopefully this helps you guys, but I'm looking at Dixie today. I think this is the only chart that matters. You guys keep looking at these shitcoin charts, but dude, you're just gambling. This is the only chart that's actually moving trillions of dollars in the market between currency pairs and Bitcoin and gold and everything. Everything is reliant on this chart. So once you master how this moves, I think you have an edge with all markets in terms of risk on, risk off, and when to trade, when not to. We're looking at the Dixie, and today this is the daily. So I've went over this on stream infinite amount of times. Hopefully you guys pick something up, but we're looking at a true range, right? So I'm just gonna switch out my fib real quick. So here's my range fib. You could see this is outlining the top. Basically, this is where resistance came in before pushing down. Oh, sorry, I misaligned this one. There we go. So this is basically where it touched resistance and then pushed down, confirming here, and then created the bottom of the range. Here's the retest of the top of the range, send it back to the bottom. So between this sequence over here, you basically form a true range. And then you're looking for sensitivity at the mid-range, right? Which we had right here, and we had right here. And again, we had it right here before pushing up. And now we basically deviated below the mid-range over here. The other thing I'm looking at with this chart is two deviations. So there's one right here. And then this one right here. So my original thesis was, if this was a deviation just to take the lows, as we pushed into the top of the range, I was looking for what would the behavior be going into this monthly internal imbalance. So you could see here, this is your monthly internal, it's more of a liquidity void than an imbalance, but point is they stopped volume over here, created a little bit more liquidity in the range, rated it, and then fell back into the true range. So one of the things I was looking for was to go risk on. I was looking for, once we deviate back into the range, is there going to be an underside retest of this right here? And you could see over here there was a bit of price action, pretty fast moving into it, which typically is an early sign that there's going to be, they're baiting longs going into resistance in order to trap them and then send it back down. So then right here you could see this is your final down candle before pushing up to raid in the deviation zone. So I'm treating that as our 12-hour breaker. You can also treat this candle, which overlays perfectly with this candle, as a breaker because that raided this general zone before pushing down. So just treat this as a general area of resistance or an SR area that you're looking to fade if you're bearish on this. The other thing is there was a 12-hour imbalance created when it fell back into the range. So overlaying the two, a breaker plus an imbalance, this is like a unicorn model that I trade frequently, especially on high time frame. I've journaled the shit out of this setup, and it tends to be the most reliable above 12 hours, so 12-hour daily and weekly. Again, Dixie has more data, so the most reliable time frames tend to be daily, weekly, monthly, or 2-week. But yeah, this retest gave the reaction you wanted to see. It basically accumulated shorts in here, one more raid on lower time frame, big displacement down, shifting market structure right here. So that's your MSS, market structure shift. And then I was targeting initially, once we confirmed the underside retest, I was originally looking for this imbalance for a reaction, just because it was lining up with the mid-range over here. So the mid-range between the range high and low, and then you had a daily imbalance. What it did, it actually sliced right through it. And then on the retest, you could see there was no close above the mid, which I use as a proxy for health on the move. So typically if it displaces and closes below on the time frame that I'm tracking, when it retraces or it does a corrective retracement back in within this leg, I want to see what the reaction is at the mid. And you could see there was no candle close above the mid. Instead, there was a massive sell candle here, likely rebalancing 12-hour and 4. Yeah, so there's your 12. Didn't tap into the 4. It just stopped short of it, but it did rebalance the 12-hour. So it basically rejected the mid over here, and now we're below the mid. Typically when you're range trading, you're watching for the behavior at the extremities in the mid. So if you zoom out, this first rejection of the mid is telling me that maybe the new range is going to be between the mid and the low of the true range. The other thing that my boy Alex and me, we actually charted a while ago. This was Alex's idea. You guys know him on Twitter, Alexandro. He's one of the best traders that I've ever known and that I think exists on Twitter. The man is an absolute phenom. This 2 week, he opened my eyes to the 2 week imbalances. They tend to be strong, especially with TradFi. I noticed that they have more data and they move slower, so the 2 week is more reliable than a daily, let's say. So you can see on the 2 week, the daily's inverting over here. So that daily imbalance inverted and it tapped into the 2 week and got absorbed at the mid. So to the downside, in terms of imbalances, you could see all the imbalances cleared out. There's only one last one right here, which is a smaller weekly one. To me, that's pretty insignificant. I think the main imbalance here gave you the reaction you wanted to see. So in my view, you have a true range, a deviation of the low, deviation of the high, and you've basically retraced into your golden pocket within the range. So you could see that golden pocket sits right at the 2 week imbalance, which is something I was waiting to see a reaction on. I think this is the early stage of a potential corrective move back up, especially because you could see that they've rated this low right here. All right, so you can see this pivot right off the mid-range. Those lows got taken over here into a 2 week imbalance. So this, usually after a big sell-off, you expect a mean reversion in the range. So what I'm looking for is this imbalance right here on the daily to now be the area of interest. So I'll just switch this out as a daily IMB. And what I'm thinking is within this dealing range from the high that got rated here to the low, where we pivoted off the 2 week, we could just apply a range fib, displaying premium and discount within the range. So what I would expect is a mean reversion back into this daily area of interest over here, which sits inside of, it's above the EQ of this dealing range. So what I would look for, if you want to tighten this up, I would only be looking at shorts above the EQ within this imbalance. So now within this leg, I'm looking for order blocks, breakers, and anything else that you can overlay onto this daily imbalance to kind of tighten up the zone. So one thing is you have this sequence of up candles with one indecision candle in between. You could call this an order block, a bearish order block. It's also a weekly bearish order block right here, because this weekly up candle basically pushed down to raid this low with pretty heavy displacement. So I'm treating this as your weekly order block. So now you have a bit of a tighter range to be looking at for fades if you're bearish on DXY. Basically, I want to see this mean revert back into the mid or somewhere around the golden pocket of this dealing range or this price leg. And I want to look at the part of this, these two overlapping arrays that are connected. So basically, I'm not as concerned with the bottom of the daily imbalance. I'm more concerned with this range right here where they overlap. And then we'll kick it into 4 hour just to see if there's anything else. No, there's no more information. To me, this is a very likely target. It's a pretty high probability target. Once we base in the 2-week imbalance, I think it's going to push up into here. Now, if it does push up the DXY into here, alts are going to get wrecked. So the idea is you're risk on when DXY is posturing for a move down, and you're risk off when it's a higher probability that DXY is going to push up, because this is basically a proxy for where cash is going. So when people are thinking that US dollar is going to be the crowded trade, everyone starts piling in. That means that they're taking away liquidity from risk on markets, right? So the idea is if this is going to move up here, you want to be positioned in shorts or at least not in longs, just in case this is the bottom and we start testing below the top side of the range inside this area of interest. So I think it's highly unlikely we go down in one shot. That's that's pretty unrealistic. And the one other thing I wanted to show you guys was I had an old MMXM or a sell model that I've been tracking, and it seems to be tracking fairly well. So on the 12-hour, I'm treating this as a market maker sell model. The idea is the deviation was the original consolidation right here that took out this liquidity, and then you pushed up basically into this level right here, another level right here. You're accumulating shorts. There's your top, and then you start distributing down. So right here, you're basically going to be forming between the 2-week imbalance and then this daily imbalance. I think you're going to form a box. Inside the Darvis box, you'll create a micro range. And then I'm looking for, at some point, a high time frame liquidity raid of whatever top of the range was created in the box. So let's say it goes up to there. I want to see engineered liquidity at the top over here, kind of like this, and then one final raid, and then down, expanding into a final box that consolidates above the original consolidation and then swooshes down and then goes up. So this is a model that I'm watching. It's still early, but it has confirmed this as a top and this as an area of interest with a potential reaccumulation of shorts coming up in this zone right here. So hopefully this helps you black-eyed nihilist. Don't go trolling me online. I do the trolling around here. Have a blessed week of trading. Later.